U.S. nat gas futures fell more than 5% to below an over 1-week low of $3.14, extending an over 2% loss in the previous week due to increased production, reduced exports to Mexico, and forecasts of mild late October weather, lowering heating and cooling demands. Natural gas production rose to 103.4 billion cubic feet per day so far in October, surpassing a record high of 103.1 billion in July. At the same time, exports to Mexico have been falling from September's record, although there are expectations of an increase when New Fortress Energy's plant starts exporting liquefied natural gas. Meanwhile, U.S. LNG facilities gas flow reached 13.4 billion cubic feet per day in October, with the return of Cove Point. Over the weekend, weather data indicated cooler conditions, with the system moving into the Great Lakes and Northeast for the following weekend. However, the weather pattern preceding and following this remains predominantly warm across much of the United States. The forecast for October 24 to 27 shows a warm high-pressure system settling in over the eastern half of the country, resulting in lower energy demand. While cooler weather systems are expected in the Rockies and the Mountain West, these areas have lower population densities. In summary, the overall weather patterns for the next 15 days don't indicate a significant cooling trend, except for a brief cool spell late this weekend. This likely contributes to the lower opening prices for the week. Nat gas futures in Europe tumbled more than 10% to below €49 per megawatt-hour, after soaring 41% to an 8-month high of €56 per megawatt-hour last week, amid milder weather forecasts, while high inventories and ample LNG flows eased supply concerns. Temperatures in some parts of the continent including France and Germany are expected to return to normal or above average in the coming days, following the current cold spell. Also, international efforts to contain the Israel-Hamas conflict, along with improved gas supplies from Norway, have eased concerns about supply disruptions. Israel has shut down a major gas field due to safety concerns amid ongoing conflicts, which could affect liquefied natural gas exports from Egypt. Meanwhile, strikes at Chevron's LNG facilities in Australia are likely to resume this week. Considering the influences of declining European prices, pessimistic weather predictions, and lingering uncertainties on the supply side, the short-term perspective for U.S. nat gas futures is undeniably bearish. Traders should closely monitor Chevron's labor negotiations and stay tuned for weather updates as potential sources of disruption, but presently, the prevailing trend is pointing downward. From a technical indicator perspective, it appears that the $3 level below is likely to provide support. The price currently sits below the minor support level of $3.20, having pulled back from the previous daily price of $3.23. This suggests the presence of short-term selling pressure. Nevertheless, it still maintains a position above the key support level of $3, which acts as a safeguard against a more significant decline. In light of these factors, the market sentiment regarding natural gas could be described as cautiously bullish, though it remains susceptible to a sharp short-term downturn, particularly given the 50-day moving average's current positioning. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.